Thank you so much for joining me today for Coffee with the Nosy Neighbor. Today we have what I think is a timely topic. With so much of our population, baby boomers, entering retirement age, I think they're between 59 and 77 now. Aging in place is a real issue. And I'm joined by two experts today, and we're going to take a look at one option that is available for people aging in place. I'll tell you, when I posted that I was going to do this interview, I got some pretty big reactions. So I'm still learning too, and I would love for you to join me and learn as well. But before we get to that, let's talk a little bit about what's happening in Leslieville right now. New listings this past week. We have 3 new listings. One of those has an offer date. The other 2 are offers anytime. And interestingly, the one with an offer date is a relist. We have 7 new condos out this week, and 5 of those have offers anytime, 2 with offer dates. In solds, we have 2 houses that sold this past week, both right around their asking price. And for the first time since I started doing Coffee with the Nosy Neighbor, there is not a single condo that has sold this past week in Leslieville. Okay, so hello everybody. I'm here with Joe Samet from Mortgage Architects and Sean Russell from
Home Equity Bank.
Home Equity Bank. And if you were with us last time, we talked about reverse mortgages, now known as CHIP mortgages. And I thought that it was a timely topic to come back to. So that is what we're going to talk about today.
Thank you. Thanks, Shauna. Hi, Sean. Thanks for joining us today. It just perfect timing to have Sean here for a discussion we were having about a client, and then to talk to you today. It's a very unspoken, or what am I trying to say? It's not very well publicized. It's not very well advertised, other than some great commercials on TV with Kurt Browning.
Okay.
Talking about CHIP mortgages and reverse mortgages. And we in the mortgage industry have found that we've seen more of a demand, more of a need for reverse mortgages than we ever have before. There are a lot of Canadians that are wanting to remain and age in place.
Mm-hmm.
There are a lot of Canadians who are wanting to take equity out of their home to help their children or grandchildren break into the housing market today. So to have Sean here, again, perfect timing, because I just got a call from a client today, because one of the things that was holding her back from calling us was the misconceptions and the misinformation.
Which, yes, please talk about that.
It's rampant. And the unfortunate thing is people are talking to their neighbors, their family, their friends, and they're not taking the time to speak to a professional who knows the product and who knows the circumstances that people get themselves into. So I, as a mortgage person, have been involved in many cases, and you, as the CHIP representative or Home Equity Bank's representative for CHIP, you hear of all the stories. So maybe it might be a good idea just to tell us a couple of quick stories that you've heard or that you've seen where people have needed help to either, again, sell and downsize, or help their children or grandchildren get into the housing market.
Or just to age in place.
Just age in place.
Absolutely. So we've had a chance to see it all, and thank you for this. So I've been working with Home Equity Bank for 8 years now. Our company's been doing this for 36 years. So we've seen the need and the desire for this product, and it's definitely becoming much more mainstream. So there's lots of different reasons that somebody would use a reverse mortgage. So you alluded to somebody taking a reverse mortgage to help their adult children. That is a big one. And we saw this in the last couple of years in particular, where we saw, both of you would know better than I do, the crazy appreciation of home values. Mm-hmm. And so it was very difficult for first-time home buyers or younger buyers to get into the market. So we had a lot of seniors.
The Bank of Mom and Dad.
Bank of Mom and Dad, thank you. So we had a lot of retirees, seniors, individuals that are maybe in their 70s that have a lot of equity in their home. And they decided, we call it a living inheritance. And basically they're saying, let's share our wealth with our kids today while we're alive and healthy and can enjoy it, instead of waiting until we pass away. And so what was happening was they were coming to us. We were, through you, the mortgage broker, we were doing the reverse mortgage. They were taking a lump sum of money, giving this living inheritance to their adult kids, who in turn were taking that money and using it as a down payment on a home.
Right.
So it was extremely, one of the biggest reasons we were doing reverse mortgages for quite a while. Today, the reason we talked about this recently, that today why people are coming to us, is think about those individuals that locked into a mortgage with TD, Scotia, RBC, whomever, 2.5 years ago. So they bought took a 3-year term. And that mortgage is coming due today or 6 months from now.
Yeah.
And they're now facing a real big dilemma because they probably locked in, Joe, you know better than I do, 2.25%, 2.5%,
Yep, without question.
2.5
Yep.
years ago.
Mhm.
Today they're going to renew at 5.5%, 6%. And so the impact on the cash flow is incredible.
Mhm.
And so we have people in droves coming to us through our mortgage broker community, through our commercials, that are saying, we need a reverse mortgage to help us out of this situation. Those are two examples. Now, there's
Right.
also examples such as an individual saying, I would like to buy a rental property or a vacation property, but stay in my existing home. How do I do that? Well, we can take a reverse
Mhm.
mortgage. You stay in your principal residence, and you can now buy a different property
Yep.
for whatever suits your needs. The
Right.
list goes on. We have
Right.
so many reasons to do these, but the good news is the demand is not shrinking. In fact, it's growing, and the opportunities are endless for the product. Just from a sheer demographic standpoint,
Mhm.
people are aging, living longer, healthier, which
Healthier.
is wonderful,
Mhm.
wonderful news. But unfortunately,
It costs
probably
money.
running out of savings to maintain their lifestyle that they didn't think they might live to 85, 90, 95. And the reverse mortgage is a great solution, great option. Not the only option, but it's a great option for them.
One of the situations we're working with right now is a client who is 72. He works 90 hours a week. He's still working full bore. Wanted to retire, didn't know how he was going to retire. We're putting a reverse mortgage on their property.
Wow.
He's basically going to retire in his mind early.
I hope you're going to his retirement
I
party.
sure hope so. I hope we are. But again, the opportunities or the reasons why people would benefit
Mhm.
by a chip mortgage or reverse mortgage are endless. And one last
Okay.
thing, that the money that you were saying, early inheritance or living inheritance, it's also tax free. So that's the beauty of that as well.
Exactly
Yeah.
right.
So I have two questions.
Mhm.
Hopefully I can remember them both. The first one is, historically, these have had kind of a bad rap, but I feel like that's changing. Can you speak to why that?
I sure can. And
Okay.
it's a common one. There's a lot of information available out there. So anybody can go on the internet and look up anything.
Mhm.
That's not always a wise thing, and sometimes you get the wrong information. And so there is a myth, if you will, that Home Equity Bank
Mhm.
will own the home
Mhm.
and has the ability to foreclose, kick people out, call the loan, ask for more money. Those are all myths. And I'm going
Okay.
to share with you where it came from.
Not true.
Not true. I'm going to share with you where it came from. And by the way, before I get there, we do have something called our no equity guarantee. So there's basically what it means is that if somebody, first let me explain this. Let me explain where it's coming from.
Okay.
So if we remember back in 2007, 2008, the U.S. housing crisis, there was a lot of things going on, and the reverse mortgages in the U.S. were no different. They had individuals at 80% loan to value. They were calling these loans. They were foreclosing on people. So that information is available online. So our clients go and do some research, and they think Home Equity Bank, they look reverse mortgage, and they see all these myths and these crazy things happening.
American based, primarily.
Based,
Yeah.
no relation to Canada, no relation to us, all American based. And so now in their head, the wheels are spinning. Oh my goodness, we're going to have our loan call. We're going to lose our home.
Mhm.
We have the no negative equity guarantee. And what that means is that if a collapse in the U.S. happened here in Canada, we take the loss as a company. So
Okay.
no negative equity guarantee simply means that if something happened and the reverse mortgage was worth more than the value of the home, we take the loss.
It doesn't even have to be an economic crisis. It could be that the individual outlived their chip.
It could
Yeah.
very
Right.
well be. So we, Home Equity Bank, take the loss on that.
Okay.
So the client is not on the hook for more money, callable, all that. None of that's happening.
Mhm.
But as you read information on the internet, you can get confused. So that's
Sure.
why you want to speak to somebody like Joe, that is a
Mhm.
mortgage broker professional for many, many years, many decades, that understands this sort of thing.
Right.
Because he's going to help people get through that.
Perfect. Okay, what was my second question? Right. How does it actually work? You come to Joe and give me the
whole
short
pro-
version.
the
How
whole
does it
process.
actually work?
The whole process. Yeah, it's actually not complicated at all. So if a client would come with the hope of having a reverse mortgage, come to Joe. They're going to speak about it. He's going to say, yeah, this might be an option for you. I think it's good. Let's move forward. Joe's going to fill out an application. It's going to come into us, and we will fund that deal like any other deal. It usually takes with us about 20 business days. Very, very simple process. There's going to be some collection of IDs and documentation. There's going to be an appraisal on the property, and then we're going to fund the deal. So it's pretty straightforward, done within a month.
And then if, let's say, somebody has a house, they own it outright for $1 million, they take a $500,000 reverse
Yes.
mortgage. When they want to either sell the house
Yes.
or when they die, How does that work?
Okay, so with a reverse mortgage, it is a lifetime product. So the clients can keep it until they pass away, or they can sell their house, as you mentioned.
Mhm.
So two things. So a client has a reverse mortgage, they want to sell their house. Done, easy. We're simply a charge on title, no different than if they had an RBCT Scotia mortgage, charge on title. We don't own the property, we won't kick them out of the property.
Okay.
So they sell their house, they pay us whatever the balance is,
Mhm.
the remaining equity they keep to do whatever they want with.
Right.
The other option is they keep a reverse mortgage until they pass away,
Mhm.
which is many of our clients because it's a lifetime product. And then the estate will take care of
Paying
the process
back.
from there.
Okay.
And they would pay any secured lenders, which would be us on the property, and then whatever's left over will be dispersed however they see fit.
It works completely different than a traditional mortgage,
Mhm.
where a traditional mortgage, somebody has to have income and good credit.
Mm-hmm.
With a chip mortgage, they don't need income because the whole idea behind this is to replace or to supplement
Mhm.
their retirement
Pension
income.
or their, yeah.
They don't have to have good credit. What they have to have is an age and equity.
Okay.
So as long as what's quite ironic about this program is that it works the opposite of an institutional standard mortgage, where as somebody gets older, they're qualified for less. With this product,
Mhm.
as they get older and
They
their equity,
qualify
they
for
qualify
more.
for more.
Okay. Anything else that either one of you want to share about this
I
today?
guess my last comment as a broker would be, we get calls from people from every walk of life. The minimum age is 55.
That's
The
correct.
ideal age for this program is somewhere between, say, 70 and 75.
Mhm.
Equity has to be there.
Mhm.
The equity relationship has to be done and based on an appraisal. But we have people that are curious all the time, and it's a matter of making the call. Just reach out to us, and we'll run the numbers and make sure that it either fits or it doesn't fit,
Right.
and we'll advise people accordingly.
That's a good point, and I would just add to that a little bit. Oftentimes, people are fearful of something that they're not sure about, or something
Humans hate change.
human nature. It's human
Yep.
nature, and I agree with your point. Definitely make the call to either one of the two of you. But I would say this is that the worst case scenario is inertia and not doing something.
Mhm.
Because if somebody's in a difficult financial situation, I'm not going to sit here and tell you that we're the only solution or the
Mhm.
best solution. We're a solution.
Yeah.
But it's your job as a mortgage broker to sit with the client, talk about things, and then find the right fit for them. So I
Mhm.
think it is extremely important that people talk about it and ask the questions, and then we see where we go from there.
Sounds good.
That's it.
Okay, well, that's pretty much it for right now. If you have aging parents and you want to know anything else about this, please reach out to any of us, and we'll see you next time.
Thank you.
Thank you so
Thank
much.
you.
Thanks, John.
guys. Thank you.